Hello everyone, welcome back to my channel. So this video marks the end of week number 39 in this Road to 100k Realized Return Challenge. And this has been a positive week, I should say, in more than one front, not only from the perspective of our positions here in the shares that we hold, but also from the perspective of the options that we sold throughout the week. And I'm going to explain why. So basically starting here by the Qs, the QQQ, if we look here at the chart for 1 week, you will see that for the most part, barring a somewhat negative day on Monday and a little bit down on Wednesday, the rest of the week was pretty much a positive week. All those days, Tuesday, Thursday, and Friday ended up being positive, and because of that, our position recovered somewhat on the QQQ. And even so, there were a few hairy moments when it comes to selling our calls, but still, for the most part, most of them ended up being okay. The only issue that happened, but this was probably because I was I did this is the way it was meant to be, given the fact that we are now using stop losses. But on Tuesday, as you can see here, by the way, this is the trades that we did for the entire week. We managed to get a little bit under 400,000, and we took a loss here of almost $110 on Tuesday. And the reason was because even though we got we sold a call as we normally do, but as you can see here on Tuesday, here on the 22nd, you see that the stock continued to rise, but then it reached a point more or less around here at which our stop loss was triggered. And even though it never reached the strike price, as you can see here, the strike price was for this one was 449. Even though the strike price was somewhere around here, as you can see, I'm pointing now at the dot. So if I did not set any stop loss, this would not have been a problem. So, and this loss would never have occurred. But given we had a stop loss, the price of the call reached the stop price, and so I was put out of the trade with a loss. However, this is the way it goes, because we can use a stop loss as a protection, not knowing what's going to happen in the future. But by doing so, of course, these small losses, relatively small losses, will happen again and many times in the future. But as long as we can protect ourselves against those big losses, I think it's a fair compromise. And so, because at this point, and was more or less around this point that the stop loss was triggered, we didn't know if the stock was continued to rise and our calls would have to be bought back much later at a much higher price. And so at the end of the day, this is one of the disadvantages of using stop loss, but I think the advantages more than make up for it. At the end of the day, is a compromise. And also, if I had used the trailing stop loss, the position more or less around here would have been, when the stock came down here around this point, we would have been out of the trade with a profit. But then, of course, if you use a trailing stop loss, you never realize the full value of the premium that you receive at the start of the trade, because once a pullback occurs, you are immediately out of the trade. So these are compromises that you have to make. There is no perfect solution for every situation. You just have to go with the one that you feel that it suits best for your trading. And so especially now at the time at which markets continue to be relatively volatile, I think we can allow some volatility in the price of our calls, but we need to just prevent those big losses to occur again. And so overall, it was a very good day, I must say. And I'm going to put back here the weekly graph. I must say that this trade over here on Thursday, I could only put one trade here. So and this trade was a profitable one, $76.77 overall. But this was a especially good trade. Why? Because here, and showing up here the trade for 224, basically the stock went full steam ahead and full steam up all the way through. And so even though I had a stop loss, the price, and keep in mind, I put here, I left when the market opened, the stock immediately started to rise. I did not sold any calls until this momentum stopped. So I left this momentum going because it was going in our favor, and with the option, with a short position on a call, this would have gone very much against us. So I waited until this phase of the trading would subside, would be over. And then more or less around this time, and I think I can show you here at which time I input the trade. This is a very important insight for you guys. And yeah, it was at 4:18 p.m. that I input this trade. And so looking back here at our chart, at 1 week chart, you will see that here, let's put back here the time. Yeah, so this is the correct time. So at around 4, yeah, it was more or less around this time here, 4:20, 4:25, in which I input the trade. And so at this time, when I input the trade, you can see that all the way until the end it went pretty much up, barring a few pullbacks. But the strike price of the call and the stop loss that I set up was basically pitch perfect, was inch perfect, because the stock went up, and so the price of the call also went up, but never touched the stop loss, and the strike price went close, but it was not achieved. You can see here the strike price was 471, and the session ended at around here with a strike price with a price of 467. So even though it went up in both ways, both on the stock and on the call, the stop loss was never triggered, and the strike price was never achieved. And I can tell you that I recall that when the trading stopped, when the session closed, this particular call was still available to be sold at 10 cents each. So you can see that the price went up by so much that even at the end of the trade, the option, he still had a lot of value. But of course, when the trade closes, the option is a 0 DT option, so there's nothing more that we can do about it. So I just left it expire. Of course, expired out of the money, so we just kept the entire premium. But it was a very perfect trade. And of course, because the trade was so perfect in terms of the stop loss and in terms of the trade of the strike price, I could not come out of the trade, because the option never went worthless, almost worthless, to sell more options at a lower strike price. There was never that possibility on the table, and so that is why it was very much a perfect trade. Of course, these things you cannot predict what's going to happen, but still, it was a very good trade. Here for Friday, yesterday, again, there was a bit of a hairy moment, because here, as you can see, I set up the strike price of 476. All right, the premium was not that much, possibly because the implied volatility had come down a bit, But still, I waited a bit for this momentum here to go down and to basically, yeah, the momentum and the volatility to come down a little bit. And so I input the trade, I recall, more or less at around this particular time here. And it was a bit of a hairy moment because at some point in time the stocks just started rising, and it went to a point in which the as you can recall, the strike, the premium that I received was 22 cents, and there was a point in time in which the premium available for this call was at 40 cents. And I recall that I put a stop loss on the 60, so it was never triggered, but still, because the strike price was 476, I was a bit concerned that if it continued for much longer, the strike price would be achieved, but ended up having a pullback. And on the last seconds of the trade, of the trading session, more or less around this time here, I so I must repeat, I must correct myself. When about half an hour at around this time, the half an hour before the end of the session, this particular call was available to be bought back at 1 cent, as I did. What happened was that I decided not to go for any trade any more trade, because I was afraid that there could be some pullback and the premiums were already quite low for the options available. But then I felt that, all right, on the last 10 seconds of the trading session, this option here for the 474 was still available to be sold at 4 cents, and this was only at 10, was really, as you can see, at 10:14. It was only about 10 seconds left in the session, and so I still sold these options. The price at the time was trading at around 472 and a half, and I sold the calls at 474. So in 10 seconds it would have to go up by 1.5 cents for these options to go into the money, but it was so unlikely to happen, and it ended up not happening. The price went up to around 473, something close to that, but never reached a 474 over those last 10 seconds, and we ended up having those options expire worthless, so we kept the entire premium with no more worries about it. Yeah, and even though, as you can see here in the here at the last candle, it still went up a bit here to 473, but this was already, when it went to 473 was already after the trading has stopped, and so the options would expire worthless anyway. But overall it was a very good experience, especially now that we are using stop losses, and so we will continue to do this, of course, in the future, because this is the way we are protecting ourselves against those big losses. When it comes to Pfizer also had a good week here, as you can see here, it ended up by quite a margin. As you can see here, they started the week here at around $22, and so it ended the week at close to 23. You can imagine at the time when I sold these options, these 27 options here that are now expired, and here they are. I sold these ones at only 1 cent. There was some temptation to sell them at with a 23 strike price, because the premium was much higher, but because there was a possibility of they going up quite a lot. It ended up being a very good decision, because if we sold the 23 strike price options, chances are we would have been called, and the calls would have been exercised, and we would have to buy those back to avoid selling all those shares at a loss. But so because we made this choice, this conservative choice, it never ended up happening. And by doing so, yeah, we just kept the entire premium, a small premium after commissions, but yeah, it was a wise decision. Now, the plan for the next week is to continue to do the same on a QQQ with the calls, with the stop loss. Again, always waiting after the first few minutes of the trading session to let the trading settle down. All the big fuss in the first few minutes is let it itself work out, and then we input our trade. For Pfizer, we are not going to do anything on Monday because earnings will come on the April 29th, I believe, so it's on Tuesday. Let me see. So Pfizer earnings, yeah, here it is. Yes, so the earnings are scheduled for the 29th of April. This is on Tuesday, and so because we don't know what's going to happen, we are not going to do anything. We could sell some calls, but the calls would have to be at the strike price lower than the price we actually want to sell. So that's why we're not going to take any risk. If the strike price at which we want to sell these shares would be available, we would sell the calls regardless. But because we don't know what's going to happen to the price, we are going to wait until Tuesday, see what the earnings do to the stock, and then we put our calls. And since we already have some cash, we will probably sell some puts as well to try to lower the average price of acquisition, the cost basis of the Pfizer shares, because we really want to get rid of them. In the meantime, a dividend will come. The ex-dividend date will be on May 9th, I believe. So yeah, so after this, we can sell the shares. We still receive the dividend, which is always a good thing. And yeah, we'll wait and see what happens to the earnings. It's going to be the biggest highlight for Pfizer next week. So yeah, fingers crossed to see what's going to happen, and especially not only what's going to happen to the earnings, but what happens to the guidance and how investors are going to react to that. Because I'm not feeling too positive about this. The stock has been hammered over the past few weeks and months, and that tells me that something must be amiss with the performance of the company, even though a lot of cost savings have been achieved over the past year, but it's pretty much a black box at this moment until we see how the earnings will come out. For the time being, this is all. We are still recovering from our loss, a big loss with the QQQ shares about 3 weeks ago, but we will continue to forge ahead and recoup those losses, because one thing is guaranteed: we will recoup those losses no matter what, especially now that we are pretty much covered against any large losses, as we now are using stop losses. But for the time being, this is all. Feel free to leave your comments below, and any questions you may have. You can also reach out to me on LinkedIn, and of course, as always, feel free to like the video and subscribe to the channel. And we will reconvene on Monday to start the week number 40 of this challenge, and I'll see you there.